But from the vantage point of, you're talking about medtech and cybersecurity, mundane, boring companies, like there's one recently that's coming public that manages homeowners associations. Are you starting to see, because of the deal flow that has slowed down in the unicorn area and in the high growth areas, are you starting to see actual deal flow, companies wanting to come public with blocking and tackling kind of mundane businesses that are growing nicely, but not uber growth companies? I know it's a good pun, but it was unintentional.
So the answer is yes. And though we have two buckets at our firm, so those type of transactions that aren't very sexy, but they're good, stable businesses. What he just said here in terms of when Tim mentioned that there's a lot of debt available. We did probably a little over 100 million in placement in debt, and you're getting low coupons. You're getting those are the type of businesses that I wouldn't really finance with equity, because you're not going to be able to see robust valuations or real liquidity or exit strategies through the public marketplace. So we're doing those type of financings. We're looking to do more traditional. So where we're finding that some of these funds that we're working with are on the same level of competitiveness in terms of rates as regional banks. On our internet side, our bank division, our public equity, we do need those exciting Uber type or Lyft type or social media or something that has that type of affinity group. Because in the small cap space, you still have investors, you have a whole new breed of investors that are just starting to touch the marketplace, the millennials that are now coming out, and they want to make their own decisions. They don't want to have a stockbroker from Long Island call them up and pick out them and tell them they need to be buying the next mortgage in their house to buy this. They want to take their time, they want to do their research, and that's what we're trying to do with our technologies. We level the playing field. We use a three-dimensional or an interactive experience where an investor can take his time and not look at a black and white boring prospectus, because that's going to tell you all the reasons why you shouldn't invest and why you're going to lose your money. So we look for opportunities that have some type of excitement around it, that they can use a visual experience, that you can have a video and you can go in and see and look for a product that that consumer or that exact person that you're targeting would actually use and now has an opportunity to buy.
And Mark, what's that level? What are the raises at that level?
Those are more in the 1 to 5 million range. We have a lot of companies that come to us, especially with Reg A. As I said, it's now 50 million. I did a webinar and I had 165 companies apply, and probably 160 of them all thought that they could now, they're worth 50 million, they're going to raise 50 million. All they do is put it out on the internet and it will happen.
So you kind of circle back to the crazy valuations. Yeah. So listen, I want to put it's time for Q&A. If anybody wants to ask anybody any questions. Any questions out there for anybody? Go ahead.
I have a question for Mark. The product or the platform that you said you're rolling out called Bank, was it also open for non-accredited investors as well?
It is, actually. That's the beauty. So a Reg D private placement, which is everything that's going on here today, it seems, is for accredited investors only. There's a certain exemption you take, 35, but for the most part, let's say you have to be accredited. What I built is a platform for non-accredited investors. Now that's for only certain types of investments, but public equity is open to all. Now you still have suitability standards and investment objective standards, but no one's going to go and say that you can't invest because you don't have $200,000 income or $1 million net worth.
Any other questions? So, quick summation, gents. So,
Gentlemen had a question.
I was just
I
going to
missed
say,
you.
which do they feel are the presenting companies with best investments?
ooh, that's a tough one. But direct.
Correct.
Yeah.
You can tell you I'm rooting for the Mets in the World Series.
I'm going to leave that to the non-regulated people. I'm the only licensed guy here, so.
So wait a minute. So let's go this. Pick two. It becomes easier if you pick two. All right.
I guess I'll go. I'll start. I thought CodeDX, because of the space that they're in and what they're doing from an aggregation standpoint, and we've got some investments in the software and security testing space. I thought that held a lot of promise. I thought all the companies did excellent jobs. I guess if I had to pick one other one, I guess I'd pick Home in the sense that I feel like they've got a pretty well-defined market space. I still have some questions around kind of execution and distribution, but I thought knowing the markets you're going after and having a solution that makes a lot of sense for your potential customer is a strong start.
I would actually concur with the choice, though I thought every company had merit. I can tell you from the antiquated notes technology that I use, I could probably use Centralo's product. I'm sure my daughter, she might be using Buncie's product in school. I think it's very, very good to know that there's a product like that special needs children might adapt to well. And Urban I really didn't understand where you guys were going until we got to the beaconing part, and I actually now can see where your platform can be effective. I don't know if it really resonated in the presentation. I think from the standpoint of the opportunity, it's definitely there. I think there are more avenues of revenue than you guys even realize, and I could go over one of those avenues with you.
Yeah, and I'm gonna, I was actually in the back, and Tim brought up the point that if you're in a bar, you don't want people seeing your face, especially if you're a professional.
I don't really want my wife watching me.
Right, exactly. I didn't want to go.
I'm usually working. Yeah.
Right, so you need to address that in your presentation, because people may not say it, but they're gonna be thinking it at the same time. So make sure it's in the next go around. So, and then the beacon part, he's got a very good point, you definitely, that should be in your presentation too, that you're gonna be using that and pushing things to people, if you haven't done that already. Come on, go ahead.
I think all of them have promise and potential. I mean, rather than focusing on the positives, because I really can't make recommendations, I'm going to say more on some of the areas that I think need to be reevaluated or really communicated better. On the Buncie, you're getting your revenue directly from teachers. Teachers have basically no budget. They're already buying all their paper and school supplies themselves. Do they really have the money, or will they spend the money to go and buy this on an individual basis? I think you need to, and you already said you're addressing that model by going after the districts themselves, but then you're coming into budget fights and things of that nature, but pretty cool technology. The Centralo, I'm old school, and I do keep all the little stickies and the pieces of paper, and I tried the Evernote, and I bought the pad to do it, and I went right back to using the stickies. So, that's just not a product that I would use, and I know I need to use it because I'm multitasking all the businesses that we run. But I know there's a market for it, so I think that's a positive. On the Code DX, clearly there's issues. I think, and you're probably already looking at other areas, but you might want to talk with InQtel and some of the other funds that are out there that are quasi-government entities that are looking to make deployment of this type of capital. Department of Agriculture right now has a lot of money, believe it or not, that's investing in these types of areas. Those are the types of things that we can probably maybe help you with. On Poem, I'm also still, maybe I missed something in that presentation, but I didn't realize, is it the individual homeowner that's going to be paying for this? Or is it going to be the service company that's going to be coming in and they've just been put it into the bill? I understand the savings that they have, but would the homeowner really recognize that?
No, service companies, right?
We expect that the service companies will not inform the homeowner that they've been monitored.
Right, so then also, you said you had the wireless capability, which I recognize, but not every home has Wi-Fi yet, and you said you had cellular. Who's going to be paying those cellular charges, and how's that going to fit into it?
Right now, the service provider is going to be paying for everything. The homeowner will not even know that it's installed.
Right, so the cellular aspects, there's fees that are associated with that, there's
That's correct.
expense.
That in our product comparison, at the high end of the modules, the $150 module is a cellular module.
Got it.
$65 module is a Wi-Fi module.
And on the Urban Eye, you do have competitors. I've had probably 3 come through my office that have similar types of technology. There's one that's pretty far advanced here in New York called Tesla. that's an app that's out there that's very similar in nature. I like the ability to tap into the CCTV, but I do also have the same concerns related to privacy issues. But I think the beacon technology, I think that, and I actually have an affinity for these type of things. When I was in college, I started 1-900 for hot bars, so I do know those types of areas, so. it was
You
good.
didn't start Under Armour in Maryland, though.
No, but my friends did.
All right, well, let's give our panelists a hand.